The general's been shot. The general's been shot. So the stock market leaders for the bull market in stocks for the last 12 months or so have been mostly the FAANG stocks: Facebook, Amazon, Apple, Netflix, Google. There's a couple others you could put in there. You could argue Nvidia. Also, there's been leaders in retail like Lululemon, Canadian Goose, and also some restaurants. And basically, a lot of these stocks went almost straight up with very little corrections. And finally, these stocks are starting to crack. So a lot of the FAANG stocks, which were, I would call them the market generals, they were the leaders of the pack. They were responsible for around 30% of the stock market move in the last year or so. And so some of them, including Apple, have had over 20% correction. I think it's down to 25 now, or at least it was. So, and on top of that, you've had Nvidia with bad numbers and a big crash in Nvidia. But recently, guys, this week, finally, we're starting to see big cracks in the leaders in retail stocks and restaurant stocks. And that was what the Trump presidency and the Republicans were touting as signs that the economy was doing well. Those stocks are starting to break down now. So you have Lululemon, which was, on fire. If you look at a chart for the last couple of years, a Lululemon, which is LULU, it's gone almost parabolic the last 18 months. But really, since the end of September, it's gone from $161 a share, give or take, down to $133 a share now, give or take now. And same things for Canadian Goose, which is a really popular clothing company. By the way, both those companies, I think Jim Cramer, Mr. Pumper, was pumping. So those were some of the key retailers, and those are starting to break. Those charts are starting to crack. They're not 20% or more down yet. So we're not in super bear market territory, but if you look on the charts, there's definitely rallies are starting to be sold. And the same thing with restaurants. So one of the restaurants that I was looking at that really had tripled in share price was BJ's Restaurants. So that's a microbrewery place with pizza. Their menus are way too big. I think they have almost 150 items on the menu. When they hand you a menu, it's basically over a 50-page book. They carry way too much inventory. It's a very inefficient restaurant, but because they're publicly traded, they can get away with it. So anyway, the shares on that stuff, I don't think overall it's a very well-run company. A lot of the food's very mediocre. The service is very poor. I've eaten at them in the past. There's one not too far from where I live. And so the share price on BJRI, Bob, Joe, Rachel, Israel, those share prices had tripled in the last year, give or take. And finally, that stock, it was in the mid-70s. It had gotten as high as the mid-70s. It started to crack too. When I looked at it a couple days ago, it's down to 54. So we are seeing signs that the major stocks that were leading the stock market higher, that the talking heads on the mainstream financial media were pointing us to, that were signs that the stock market was still healthy, those shares are breaking down now too. Okay, so before I do any more analysis, any more of my opinions, anything like that, just a stupid disclaimer. All of the stuff that I talk about here in this live stream show is for informational and educational purposes only. I'm not a financial advisor. Do your own individual research and due diligence, and good luck out there. And I don't want to get nasty emails or comments or anything like that just because I discuss something on a show. Do all your research elsewhere. Okay, so back to the regular show. Oh, did anyone notice that it's been coming out that Warren Buffett has been buying up, besides just JP Morgan, PNC Financial? So his Apple bet is down almost 25% now. But on top of that, he's been loading up on bank stocks and financial stocks. Just a massive increase in those. So Bank of America, the Wells Fargo position he already had. He's been loading up on a lot of other ones too lately. Very interesting. I wonder if it's politically connected why he's buying. Maybe he's trying to do it to prop up some of those shares, because you would think that with the European bank exposure and the problems in emerging markets, that the bank stocks are not a good buy right now, that they're a value trap. Comment on what you think, why you think Buffett is buying up more bank shares. Okay, so the stock market, the major stock market leaders that have been leading the stock market up for a while are starting to crack. Some of them are in bear market territory like Apple and Nvidia and a number of the FAANG stocks, and others are just starting to crack now this week, like the key restaurants and retail shares that were going up like crazy. Moving on. So, I think it would be actually kind of hilarious if Jerome Powell, even though President Trump threatened him and they supposedly had a talk, if Powell hiked rates in December of this year anyway. Answer listener questions at the end of the show, man. Wow, you want to dump all your silver? I saw a video a couple weeks ago. There was a guy actually he videotaped himself putting all of his silver in the trash. He said he bought it at 48 or 49 in the 40s, and he started putting it in the trash can. Oh boy. Well, he probably put too much into silver. Anyways, I want to talk about interest rates. So it'll be interesting to see if Powell actually hikes rates in December or not, or if he's actually going to go along temporarily with Trump, or if he's just going to totally ignore what Trump says and continue hiking rates and intentionally crash the stock market. But the yield curve is inverting now. So we're not like a nasty inversion yet, but it's getting there. A lot of the curve was, at one point earlier in the week, it was a lot of the stuff in the yield curve was 16 basis points apart. So it had been flattening for a while, but it had started to go inverted now. And some people think that means that the Fed is going to panic and reverse course and start lowering rates again. We'll just have to see. Because it seems that the Fed, the Powell and those guys, even though he did the stuff to temporarily with some of the announcement to appease Trump, that he may still hike. I have a good amount of friends who think that even though Powell seemed to have appeased President Trump, that he will still continue to hike. Not only will he hike in December, he will hike a couple times next year, not just once. Okay, my thoughts on the U.S. versus China trade war. Is it really on hold? I don't think it's really on hold. I think Trump is grasping at straws and trying to claim anything as victory. Trump got the oil prices down, but there's going to be unintended consequences about that, because now if the oil price stays low enough, number one, it could bankrupt a lot of the Canadian oil producers because of the differential. The Canadian oil producers are going to be in trouble, and they're going to be yelling at Trump for that. But number two, the shale oil producers, once those hedges come off, they're going to be in some problems too if the oil prices don't go back up. So be careful what you wish for. You just might get it. And there's always unintended consequences. But some of the stuff that came out today with the... Oh, man, I forgot the CEO's name. I can pull up Zero Hedge really quick. The CFO. Okay, it was... Oh, I'm going to botch this. Yahweh, CFO. And the U.S. government was involved. So if the trade war was really on hold, would the U.S. government really be doing that? Or is the deep state operating behind Trump's back? I don't know. I actually just saw an article on my Twitter feed from the Daily Beast, and I normally don't look at anything there, but a couple of my friends who are libertarians actually shared it. I was shocked to see that. But they're actually running a story that Trump actually doesn't care when the whole debt thing crashes, because Trump has supposedly told friends that the U.S.'s national debt problems are going to crash after Trump's gone. So I don't know. We'll see. That'll be interesting, though. So I think the trade war, maybe it will be temporarily on hold for a month or two at most. Remember, guys, in the past, over the last years, really after the first couple months Trump was in office and he started to really escalate the trade war, that there were always press releases that things were going to be on hold, and then they would escalate again. So, I mean, Trump really operates things at kind of a bipolar. So I wouldn't be surprised if tomorrow or by the end of the week that there's just crazy stuff that totally contradicts some of the progress that was made in the trade war. I will talk about listener comments and questions later in the show. Scott, I see you. There's two Scotts who are commenting, so I'll get to those later. Okay, so my comments on the Nolan Watson interview. First of all, I think he's at a unique point in the gold and silver markets where he either funds brand new gold and silver mines, or he can finance maybe a chunk of gold or silver byproduct from a base metal miner for a new mine, or a producing miner with a bad balance sheet. So he sees a lot of deals come across his desk and he turns almost all of them down. And I think he gave us some great insights. I think from what he said, the primary silver miners are in way, way worse shape. And one of the major reasons is because of all that silver byproduct. And from what he made it sound like, he thinks that there won't be a lot of new a lot of new copper supply that comes online. But I actually disagree with him. I think that Chile, they are one of the lowest cost producers in the world of copper, and they will flood the market if they have to, because they desperately need the tax revenues. So a lot of these governments have big financial problems, and Chile is willing to flood the market with copper, just like a lot of these OPEC producers are willing to flood the market with oil, because it's actually perverse. If you read your economics textbooks, they say that low prices actually curb supply, but in the short term, that's actually not true, because if you go back and look at the oil market when it had big busts and the price dropped, the OPEC producers and a lot of national oil companies and even the private sector oil producers that either had hedges on or bad balance sheets with debt, they actually either maintain production levels or increase them. So they temporarily, in some cases, actually increase production because they are desperate to make up for lost revenues on volume. So the economics textbooks that teach supply and demand, they don't talk about that. Okay. They also don't talk about central banks or regular bankers at private creditors or private equity or hedge funds or mutual funds or pension funds stepping in and giving some of these guys like ridiculous junk bond loans. So, Nolan's an extremely bright guy, and I think Sandstorm Gold is extremely well positioned for growth. They have a very solid, in my opinion, a very solid foundation to grow from. And they're, I think, the only company that's going to be doing share buybacks with free cash flow and also growing their revenues a lot in the next couple months. But I disagree with him on the copper market. I think we could still see a lot of copper supply that floods the market. Now, in the long term, this will bankrupt some of the higher cost and bad balance sheet private sector copper miners. So I don't think the government of Chile is going to go bankrupt, but some of these higher cost, bad balance sheet copper miners will. And I know, no one mentioned this, either on this interview or in the past, that a lot of these primary copper miners that have gold byproduct or silver byproduct, they want to sell those revenues. They want to sell a stream on the copper or the gold, on the gold or the silver byproduct. The problem is that if you do one of those deals, the miner could go bust and then the deal goes bad. So I think he's avoiding those. You may see some of the other larger royalty and streaming companies like Franco-Nevada that has a better cash flow, better balance sheet, bigger company, more assets generating cash flow. You may see them take some more risk. They did a deal like that recently with First Quantum on a massive gold stream on the Cobre Panama mine, which is coming online in Panama. And so you may see more of those deals, but Sandstorm Gold is going to be more conservative for right now and avoid those types of deals and not take on that type of risk where there's dangerous counterparty risk. So I think you could see, even though Nolan says the research he does that there's not going to be more copper supply coming online, I think you could see more copper coming online with governments that are desperate for the revenues. And Chile would be one of them. And you're seeing the same thing out of like the OPEC producers with flooding the market with oil when the oil prices crash. Because, logically you would think, why would they flood the market with more supply after the price crashed? It doesn't make sense. But they have bills to pay. Okay, they have social programs. They have to prevent a political revolution in their own country. They have enormous government debts that they have to pay. So that's why they're willing to, at least temporarily, produce at a loss or flood the market with more supply and make it up on volume. Okay, I hope I explained that pretty good for you guys. But the primary silver miners, that also other comments on Nolan Watson on the interview, some great insights there. He actually said, and I apologize for some of the problems with Zencastr, I'm learning how to use it, and the connection wasn't the best because he's in Vancouver and I'm on the East Coast, so it's a tough connection. But he actually said that no primary silver miner is making a profit now. I found that very interesting. So here we are at $14.46. The silver price was a little lower when we did the interview on Friday, but he said at that price, not even Pan American Silver and Fresnillo can make a solid profit. Found that very interesting. He actually said that Pan American Silver is only making money on their gold production. And if you look at the revenue numbers for Fresnillo, which is the world's largest primary silver miner, they actually, I believe now, effective the last couple of years, they actually have more annual revenue in gold production than they do in silver. So that's very interesting. Okay, moving on. So the palladium price, this is interesting, really interesting, guys. My friend David Jansen has been covering this. So the palladium price right now is at $12.29 an ounce, a record, very, very high. And that's almost at the gold price. We're at $12.39 gold when we're recording this live stream. So why is the palladium price almost the price of gold? I mean, that almost never happens. This might be the first time it's happened before. Normally, it's the platinum price that's more than the gold price. And the platinum price right now is down to $798. So from David Jensen's research on the LBMA, the London Bullion Metals Association, their over-the-counter markets, that he says that there's a short squeeze of physical metal for palladium. So it's a combination of factors of the paper market in palladium, that there's the same type of manipulation games in palladium on the LBMA as there is in gold and silver. The problem is that the mining supply for palladium, Russia, which produces a lot of, if you're not familiar with the palladium market, I think the majority of the annual palladium production comes from Russia, Zimbabwe, and maybe South Africa. I think 3 countries produce almost all the world's palladium. And so Russia has been cutting back a lot on their palladium mining and also hoarding it and not putting it on the market. So that combination of factors, the paper games, the market manipulation, and the palladium price on the paper palladium price, plus the physical supply, and you have the lease rates for palladium spike, and you had a short squeeze, a run on the banksters, the bullion banks for palladium. So maybe that will happen for silver. We'll have to see. It's not going to happen in the short term for silver. Unfortunately, it looks like there's going to be more pain for silver, because the gold to silver ratio is out of whack. It looks like more money is going into gold than silver. Silver's not having as strong a rally as gold has had. Okay, checking my notes again. So I saw something interesting on Zero Hedge today. It says the state of Illinois has around $73 billion in unfunded liabilities for state employees. Wow. You know what's even scarier? The city of New York has over $100 billion. This was a Bloomberg story first week in November. The city of New York has over $100 billion in unfunded healthcare liabilities for city employees. How do you think these states and municipalities are going to pay? How? I'll tell you how. They view all of us as tax cows. So if you stay and live in those areas, they're going to layer on the taxes. They're going to probably go after property taxes. Like, they're going to jack the property taxes up a lot. I know Chicago and the state of Illinois were planning on increasing property taxes on even middle-class houses. So they weren't just going to soak the rich. Do you really think that a lot of people who don't have jobs in those areas, but either can move or find another job, or their business is online or something, do you think they're going to stay in that area and take it and voluntarily pay $5,000, $8,000, $10,000 a year more in taxes? I don't think so. The majority of people are not going to do that. If they can afford to do so, or they have the ability to do so with their job and their family, they're going to have a discussion. They're going to get the hell out of there. $5 penny. It's better than living in China and not owning your own life. Well, we're tax cows here in the United States. I mean, they're honest about their totalitarian government in China and their social credit score. Here in the U.S., the fascism is more covert. The totalitarian government from the big tech social media companies and all the other bullshit is more covert. I mean, on the mainstream media, they won't even talk about George Soros, won't even say any bad things about the Federal Reserve. There was a guy from Judicial Watch, their head of research, and he was on a Fox News interview. This was a couple months ago. I saw a clip, and he said something bad about George Soros, and he was banned for life from Fox News. This is a guy that he was talking about the caravan stuff and how George Soros groups in Latin America, George Soros was funding this stuff. And Fox News, I think it was on Lou Dobbs or one other show, and then boom, they cut him off, and I heard he was banned for life now. And Judicial Watch does excellent work. They had boots on the ground down in Guatemala, and they were following the caravan up, so they were doing their stuff. You can look it up. You can Google it. News is propaganda. News is not real news. News is biased. It's op-ed pieces pretending to be objective facts. Okay, so remember I did that live stream last week also on Tesla Motors? Well, I was visited by 2 members of the Tesla Troll Army, and they proceeded to, before I blocked both of them, they proceeded to write about 10 nasty comments each. Really, really nasty stuff about me. One of them called me a meth head and some other stuff. You know, I really think, and this would be hard to prove, but I think either in the cult of Tesla, the Teslemmings, that Elon Musk, and probably Elon is doing this, that I honestly think that he is paying people to go all over the internet and troll for him, especially on YouTube. You cannot criticize Tesla without, and then there's and then there's Tesla Motors and Elon Musk pumper channels. Like, after I did that live stream, YouTube started suggesting videos for me, and they started suggesting these weird Tesla pumper videos where this guy who was like an internet marketer had like 100,000 views on a video about Tesla, and he did 5 minutes of research and cut a bunch of pictures of new electric cars, and he didn't bring up any of the valid cases, the valid facts that the bears have brought up about the company, and he just, basically shitposted on a video. And it got tons. I think he was probably paying to market that video to get like 100. He had over 200,000 subscribers in his channel and only been around for a couple of years. If you know anything about YouTube, you know to grow that quickly for a YouTube channel, you either have to have a viral video that gets many millions of views right away, and even then you might not get that many subscribers, or you're paying enormous amounts of money to YouTube and Google out of your pocket to grow your channel that quick. That's how all those that's how all those crypto pumper channels grew so quickly to over 100,000 subscribers. Some of them were spending over $10,000 on advertising to grow their channel that quick. Okay, so I think I covered pretty much everything. Oh, I was going to mention the Warren Buffett, Berkshire Hathaway stuff. Yeah, so it's kind of interesting that he's in these bank and financial stocks before a crash. You would think that he would go into these, he would wait for a big bust in these bank stocks, and then he would try to do what he did to General Electric and Goldman Sachs and try to get himself like another crooked deal with like a 10% preferred shares that only he would get, or some other type of like stock, like call options, like stock options or something. You'd think he would do something like that. So maybe the powers that be, like the banks, the Wall Street banks, or someone else, asked him, instead of waiting until the next crash had already happened, to go in there beforehand and start buying up the bank stocks now, to try to fool more value investors to buy up the bank stocks so they don't crash more too quickly. Okay, guys, well, I'm done with my notes. We finished pretty quick, so now I can start looking at your questions and comments. Thank you, STP Trader, for the super chat donation. Much appreciated. And thank you to all my Patreon account contributors. I think I have like 69 of you guys. There was one loyal podcast listener. I'll just bring this up. I won't mention the guy's name. I followed him on Twitter, and then he proceeded to send me like 10 direct messages a day, about unsolicited direct messages a day about his life and all this other stuff. I mean, like, come on, man. Just because I followed you on Twitter doesn't mean you should do that. And then I muted him, and then he called me out on muting him. And then I politely told him why I muted him. And then he started cussing me out. And then before he told me he was going to unfollow me on Twitter, then he sent me another like 5 or 10 messages too on direct message too. And he was telling me he doesn't do that stuff. And then he sent me all those messages anyway. You know, people are ridiculous sometimes. They do this stuff. No self-awareness. Unbelievable. He's probably going to listen to this and send me a nasty tweet, even though he says he doesn't follow me anymore. Okay, Scott Engelman. I know you got a whole show planned. Well, the show's done. The main part of the show's done. What do you think you do with my silver once this spike? Well, Scott, I'm not a financial advisor, so there's not financial advice. I can't give my opinion. It depends when you bought the silver, how much of your total investment portfolio you have in silver. Are you diversified? Do you own some other stocks? Do you own some real estate that generates cash flow, some rental properties? What other investments or assets do you have? So I don't think it's a really good time to sell a lot of your silver right now. But there are people doing it. There's people, I know libertarians out there who have said, you know what, man, it's manipulated. I give up. It's never going to go up, or maybe it's going to take years. I don't care. I'm going to go buy crypto, or I'm going to go start a business or whatever. Or I'm going to take a loss on my taxes with the money I bought, and then I'm going to go travel with the money or something. So I've had friends tell me that. They've totally given up on silver. You know what, though, guys? It will eventually break. Like I've outlined the problem. The main thing is on the supply side. So there's the paper market manipulation, but everything is on the supply side. After that silver byproduct from the copper miners starts to be cut, and or the copper miners go bankrupt, you will see silver supply shortages. Okay? The silver byproduct from the copper miners has been what's kept the silver price in check, besides the paper markets. Because, as I've explained at length, it's a balancing act. They still need the physical metal, but then they have to manipulate the paper price. But they've been getting the metal and delivering it later from the futures contracts from the silver byproduct from copper mines and base metal mines. But if we're having a bust now in commodities, for the most part, except for natural gas and uranium. But if the general stock market in mid to late 2019, because that's right now, in my opinion, the way the market's setting up, we're having a lot of chop. We're having volatility down. And then there's an attempt to manipulate the stock market back up. The mainstream financial media is involved in this. They're bringing on anyone, absolutely anyone they can find that can come up with any bullish case whatsoever on stocks. I've been watching some of the mainstream financial media this week when the retail companies were starting to crack, and they were bringing on any idiot who had, whether they had a good resume or not in the financial industry, anyone who had any type of bullish argument for why the stock market, this crash was overrated, the retail money needs to buy the dip. And because of this, and like I said, I don't see any evidence that the institutional money has stopped selling the rallies, but this is going to trick enough retail money who are in mutual funds and passive ETFs like index funds to potentially keep buying the dip or not sell, liquidate. And so this will carry over, in my opinion, into 2019. And things are setting up with a lot more volatility in 2019. And by mid to, my educated guess, probably sometime around Q3 2019. Because normally, if the stock market doesn't crash early in the year, it normally takes to around September, October. Because Wall Street, the big money managers, take about 5 months off. They selling, the old saying, sell in May, go away, come back after Labor Day. Well, a lot of the big shot guys actually do that. They go to the Hamptons in New York. They go from New York, they fly in their helicopters, or they take a jet because there's a new Goldman Sachs, I think, has a helicopter for their clients who want to go to the Hamptons for the weekend over the summer. But and I think there's also an airport there. So that's why during the summer, there's not a huge amount of volume and not a huge amount of stock market activity, because a lot of the financial professionals are on autopilot. They're either in the Hamptons or they're in like the south of France. They're on vacation somewhere or going to conferences or whatever. So I think things will be delayed until like mid to late 2019, and depending on what the Federal Reserve decides to do. Because if the Federal Reserve reverses course, right, after another rate hike and maybe says that they're going to start doing QE again, then that would change my view on things. But I expect more volatility to increase in 2019, and I expect potentially, because the shares are starting to break down, restaurants and retail were the main leaders for the rally besides the FAANGs, for the stock market moving higher, and those are starting to crack. I expect 2019 to be a very volatile and potentially big stock market crash, unless the central banks and Fed reverses course. Now, maybe if there is actually a permanent agreement on the China trade war, this could slow things down or delay things or push things out, if there actually is a real agreement. But I do not see President or Emperor Xi agreeing to the demands that President Trump and a lot of American corporations actually want on intellectual property and the other concessions. I just don't see it happening. China just does not have the court system. China does not have the private property rights for any of this to be fought properly. So basically in China, there's kind of some type of capitalism, but there's no private property rights. So there's a lot of, hacking and IP theft and routine copying and stealing. I mean, look, I think I gave this example already, that the Consumer Electronics Show in Las Vegas that's coming up in the next like 3 or 4 months, that there's a that Samsung and LG are supposed to release at the Consumer Electronics Show in 2019 a like foldable smartphone. And the theft of intellectual property is so good in China that hackers and corporate spies and like factory workers who are willing to sell things for thousands of dollars that they shouldn't, that it's so pervasive and prevalent in China that a Chinese technology company got the technology that Samsung and LG had that they were going to debut in a couple months, and they already made a full version and are selling it. This is probably the same thing, just knocked off at a lower price. So I think that's a pretty good. I mean, there's hundreds of other examples of this. There's estimates out there that over $600 billion in intellectual property and research and development is stolen per year from the U.S. and Europe by China. Okay, so let me look at more of Scott's comment. Buffett's a globalist. He needs to save his ass. Well, Scott, Buffett has over $100 million in cash for Berkshire Hathaway. Berkshire Hathaway has had accounting problems recently. It's just interesting that Buffett would be buying bank stocks now. Yes, they're kind of in a bear market. I think some of them are down. Some of the bank shares are down 20%. But you would think, you'd think that Buffett would be aware of the global macro stuff with like subprime auto and the dollar rally. The dollar right now is it's still hovering around 97. It's just tick below 97. It's 96.99. The VIX is back up. It was down at 16 earlier, I think only a day or two ago. So you would think that Buffett would be aware that American banks have exposure to European banks and exposure to emerging markets with the dollar rally. You'd think Buffett would know some of the stuff because he would, if he has shares on a board. I think he has a large share position in Wells Fargo. He's had that for many years. So you'd think that he would have access to this since he has a board seat. Scott D's, dump the silver, don't buy Bitcoin. Well, what are you buying, Scott? Are you in cash? Are you just going to hold cash? What are you buying then? Are you shorting? Are you shorting stocks? Are you buying rental property? Are you buying from the Chinese that are selling now? The Chinese that flooded the market with all their credit and created a global real estate bubble with the Australian real estate market collapsing now. And looks like things are going to be cracked down on in Vancouver. The fentanyl market, I've heard crazy stories from friends. Nolan Watson was telling me this off the record. Because he's grown up and lived in Vancouver, I think, all his life. And he was telling me about like how much drug money and Chinese money it has like drastically warped and destroyed the real estate market in Vancouver. And how much drug money is buying like empty houses and paying whatever price for them. And the politicians are letting like these cartels and stuff like that get away with it. And the like Chinese money launderers get away with it. So if you're a Vancouver resident, I guess you better start voting those politicians out, right? You got to vote the bums out. Is that you, Emma? You were hoping to hear from me today? Scott, Trump wants him to crash the stock market. He's doing exactly what Trump wants him to do. Scott, you really think Trump wants the stock market to crash? No, I don't think Trump wants the stock market to crash. Trump is taking credit for the stock market. Now, he did try to blame the Fed and shift it back, but when he was calling out the Fed and then the Fed seemed to halt it, he would start taking credit for the stock market rally. I honestly don't think Trump wants the stock market to crash because he knows then that will hurt the Republicans in the next congressional election. So I don't think so. I think Trump wants a weaker dollar. And Trump is the king of debt, remember? No one's used more debt than Trump. And Trump has escaped bankruptcy without getting totally ruined. Many times. Scott, cheap crude hasn't even hit the refineries yet. Cheap fuel through 2019. Yeah, there's a lot of landlocked oil in Canada that's selling at an enormous discount. I'm sure the Chinese would like some of that. And the shale oil producers, a lot of them are hedged, so they're going to deliver that oil into the hedge at a higher price. But we'll have to see. Now, the OPEC, there is what Qatar, or Qatar, depending upon the pronunciation. They are leaving OPEC, but I think they're more known as a natural gas producer. But I've talked about this many times in the past. I've interviewed many oil experts over the years. The oil, normally, typically, the members in OPEC routinely cheat. So there's a certain quota, or they agree to a certain production level, and the OPEC producing country says, you know what? We need more money coming in. We don't care what the oil price is at this time because we have to pay off this social program or this tax bill or this bond is interest payments on that are due, and we don't want to default. So most of the OPEC companies, most of the OPEC countries, the national oil producers, are routine cheaters. Now, obviously, with countries like Venezuela, they can't cheat anymore because they haven't invested any capital into their oil market. So their oil production has declined enormously. I think it's below 1 million barrels per day now. And on top of that, just to buy the Maduro government more time, Venezuela already gave away in oil contracts like guaranteed production to Russia and China. So just to keep that shitty government, that shitty corrupt government that's destroying the people in Venezuela in power, the Maduro government, probably Chavez did this too, gave away a ton of future oil production to Russia and China. Venezuela is a total mess. I feel really sorry for the Venezuelan people who did not vote for socialism and cannot get out of the country. Albert Campos, as it turns out, Trump was worse for oil than Hillary. What do you mean by worse than oil, Albert? Because it depends if you're an oil producer or a consumer. So if you're a consumer of oil, if you have an SUV or you have a small business that uses a lot of trucks or vans, a cheaper gasoline or oil price is not a bad thing. So it really depends on if you're a consumer or producer. Miser, this correction reminds me of the 2015 lows where we were trading. Message retracted. Okay, now I can't read it. Okay, that was Miser. You definitely just pulled a high-frequency trading algorithm. You just spoofed me, Miser. That was not funny. You spoofed me. I did not like that. Joe Master 89. If China and Russia are stockpiling gold, would it be in their best interest to short gold paper contracts while buying physical? Could that be keeping prices down rather than Wall Street? Yes, but if you hear some of the funny thing is, I think Blythe Masters and other people at JP Morgan, when they were actually asked in hearings on the CFTC, there was public hearings, I think it was 2010 or 11. I actually watched them on my computer because I didn't go to the hearings. I couldn't get to the hearings in DC that day, but I was watching it online, and they actually said that they were managing a position for a client. So it could be that like JP Morgan and the other paper shorts on the COMEX, the bullion banks, are managing like a short position for a government. It could be like the Chinese government where they short the paper market and go and buy the physical, etc. So but I would say that once the trend is established with the either government or a bullion bank or a central bank shorting the market, now I've heard off the record from a lot of these traders, from like the COMEX, like floor traders, people who either are floor traders now or were floor traders, and they've told me off the record that they know, I won't mention anyone's names, but they know that gold and silver are manipulated, and so they pile onto trades. So when they see that these orders come in to knock down the gold and silver prices, they just pile onto the trade to make an extra quick buck for themselves, to make more money. And some of them, if they're smart, they just accumulate more physical metal with some savings. So if you know with your trading that you can profit shorting gold and silver, and then with some of your profits you can buy physical metal, and you know you can keep doing this because you know how the game is played. Some of the traders in New York City and Chicago and London are actually doing that. Now, you guys know my opinion on China. I think China is in a lot more trouble than people realize. The best case scenario for China is Japan. They've gone crazy with the RMB creation and the credit creation the last 10 years. China was in much better shape 10 years ago before they went nuts with the credit. Even though they are accumulating physical gold, their money supply of RMB and their credit creation is growing way faster than their gold holdings. Way faster. You don't add tens of trillions of dollars worth of credit in only 10 years and say that you're fine because you have 20,000 or 30,000 ounces of gold. Excuse me, 30,000 tons of gold. 20,000 tons, 30,000 tons of gold. Okay, if you're growing credit at tens of trillions of dollars pace, and the IMF says that the credit, I think, is going from 40 trillion or so to 50 trillion only a couple years now. That's how crazy things are getting. Your physical gold holdings are not going to cover that if your credit's growing out of control like that. You're looking at a bust like Japan from 30 or 40 years ago. Now, Japan didn't totally collapse, okay? But you are looking at a big bust. Scott, if gold goes below 1,000, there's going to be a massive amount of bankruptcies of primary gold miners. There are no more costs to cut at the mine. The only cost now with the lower oil price, if the oil price stays at these levels or goes lower for a while, this will help some margins. But it has to stay at these levels for a while. So that will be a temporary reprieve. But if there is an oil rally or the metals price goes lower and that puts the margins in jeopardy again, it's going to be bad. It's going to be very, very bad, especially for the primary silver miners. Like Nolan Watson said, and I agree with him, the primary silver miners are in worse trouble. Now, I don't know if every single primary silver miner is break-even or losing money. I had Pan American Silver and Fresnillo in my video a couple months ago. I had them making some money still. Now, they were making more money with gold, their gold production, than they were with their silver, but I did have them because they were the lowest cost producers, still making some money with silver. But I was looking at... It's not Silver Standard anymore. It's SSR Mining, so it's SSR Sam Robert. And I found that I was looking at an investor presentation last weekend, and in their investor presentation, they weren't listing all-in sustaining costs, which I found that really weird considering the whole mining industry uses that now. And they're talking about their cash costs at like $700 an ounce gold. And then they only claimed to have about $75 million in annual free cash flow from producing 440,000 ounces of gold equivalent. So if you do the math, if you have 440,000 ounces per year in gold equivalent, at the current gold price, you should have a lot more free cash flow per year than $75 million. So they're all in sustaining. They're way understating their costs. I think they're making a little bit below $100 an ounces in free cash flow margin for their gold production, and I think they may be losing money on all their silver production. And they have a large silver mine in Argentina that's producing and bringing in more feed, because I think they did a deal with Gold Dinero. So the mining industry in general, let me look at some of the share prices really quick. First Majestic Silver is below $5 a share. You know, that's a key level. Nolan Watson and I in our discussion were talking about that. If some of these mining stocks that are listed on American exchanges, if they can't get above $5 a share in the near future, the mutual funds are going to be, and some of the ETFs may be forced to sell some of them, especially the mutual funds, because there's bylaws for mutual funds and pension funds that they cannot hold a stock that's below $5 a share. So it's just going to become a vicious cycle. The selling that's already occurred is going to accelerate. And it's not because the mutual funds want to sell the shares, it's because they have bylaws. So if you're a pension fund manager and you're making 6 figures or 7 figures managing a lot of other people's money, you stick by those bylaws because you got a good job. You don't violate the bylaws. But China and Russia are stockpiling gold. Other governments are stockpiling gold. So there is strong demand for physical gold and silver, although retail demand for silver on the investment side is dropped like a rock. Louis Camersano at Small Gold has shown that North American retail demand for silver has like fallen off a cliff. But physical demand for silver and gold in China and India and some other countries and central banks is still very strong. Joe Master, better to buy at cheap prices if stockpiling. Correct. And the miners won't do this, the primary gold and silver miners, but they should really think about hedging some of their oil and diesel costs at these oil prices. Now, maybe oil prices will go lower, so if oil prices went lower, they should hedge even more of their oil production. They should protect their margins, trying to get as much cheap energy locked in as they can. Because if you lock in oil around $50 a barrel and it goes to $75, $80, $90 a barrel, your margins are going to be gone unless metals prices go way, way higher. But if the paper price manipulation or whatever reason keeps the metal prices flat and the oil and energy prices rise faster than the metals prices, your margins are gone again. So I've publicly said this many times that the miners need to come up with some type of hedging program where if the oil price or diesel price crashes, they need to lock in some cheaper supply to protect their margins. And that will get them through the hard times, cheap energy, because that will protect some of their margins. So even if metals prices fall, they'll still have some margin there because they have cheaper energy. But they're not doing it. None of the miners are doing it, to my knowledge. Knave Child, infinite growth on a finite planet is impossible. Civilization is headed to collapse. Well, yeah, unless there's some type of infinite energy. Unless the fusion problem gets solved. There's going to be... Human ingenuity and innovation can solve some of these problems. So people have brought up the food problem. Well, there's hydroponics, aquaponics. I know in the lab they're looking at tube meat or something like that. They're growing stuff on... There is some stuff. Hydroponics and aquaponics, they can grow in like a more advanced greenhouse. They can grow like an enormous amount of food straight up. It's not going to be as cheap though. It's going to cost more money, but it's going to be higher quality. There are ways to solve some of these problems, but a lot of these solutions are not being implemented. But the main problem, Knave Child, is cheap energy. Energy returned on energy invested, and also battery problem. The battery problem is a big, big problem. We need better storage of energy because we have all that solar energy from the sun and other energy we can generate like geothermal and stuff, and we don't have accurate places we can store it. So if someone cracks the battery code, I don't know what it's going to be. Maybe it's some type of nanotechnology. Maybe it's graphene 10, 15, 20 years from now. I don't know. But hopefully it will get solved. So Scott, if gold does go below 1,000, the entire industry is in peril. They just don't have any more costs to cut. Now, some of these companies, the low-cost producers, I think this is why you saw Barrick do that. You saw Barrick Gold preemptively do a merger and acquisition with Randgold, and that's to cut any more costs that they can cut. I think you will see a massive cut in selling general and administrative expenses with that merger. So not only will it add more total reserves to the books, so there'll be a lot more long-term gold reserves, but it will also allow them to cut some costs. So there will be some synergy there. We'll see, though, if costs actually get cut or not. Knave Child, Facebook has been revealed to be funded with a CIA front group. In QTEL, the whole company is a spying platform. When Facebook collapses, they will have their new spy platform ready to take its place. Well, a lot of the big tech social media companies have been funded by that type of government money. There's been government money into a lot of these. Facebook was also selling, they developed very sophisticated facial recognition software. Their software is so sophisticated that you upload a picture and even without you trying to add a tag at all, it can tag pretty accurately. So I believe they sold not only that technology, the software, the better facial recognition software to the U.S. federal government, they also sold all the data without people even like fully realizing it. I guess in your terms of service, it's kind of like buried in there with the lawyer fine print, but I mean, how many people actually read the terms of service or the fine print? Hi, Seth. Thanks for joining me. Exit taxes. Scott, you mean leaving the U.S. or leaving a state? That would be messed up if a state tried to charge exit taxes. Now, I know California is a really messed up place. I've heard stories about California to people, either small business owners or professional athletes or celebrities who have visited the state for a week or two, that they've managed to get their hands on some type of information that can tell them, I think they get it from the travel companies or the hotels, that someone's been in the state of California for a week or longer, and in the California tax department, the state tax department tries to send people a big tax bill from out of state that, oh, you're doing business in our state. A lot of people aren't aware of this, but if you're a professional athlete and you play in another city and state than California, but you're in California for a couple weeks or a month out of a year for like playing a bunch of professional sports games, those guys get hit, some of them, with like a $50,000 or $80,000 tax bill just for being in the state for a couple weeks or a month. Most people aren't aware of that. Just food for thought. But government see us as tax cows. They're going to try to layer on new taxes. My best friend is paying like a ridiculously high car tax per year in Arlington County, which is one of the supposedly best business counties, although it's not really that good a business county anymore. It used to be. I hear in Las Vegas they even started a big car tax now per year. And Las Vegas used to be known as pretty low tax. Nevada used to be known as low tax. But you got a bunch of Californians moving there. You got a bunch of people from other states where there was high tax, like New York and Michigan, Illinois, moving to Nevada and Las Vegas area to try to pay less taxes. And then, shock, surprise, taxes are going up there too. $5 penny, I would make an argument that there is no perfect place to live anymore. There is no perfect place to live anymore. So, if you don't speak the local language, I mean, moving to a place and not fitting into the culture, it's going to be tough. There's only less bad now. There's a lot of difficult choices people are going to have to make. The new normal sucks. JRL Innovations. CBD hemp industry is about to explode in the USA after the Farm Bill is passed. Are you saying on the federal level with a new Attorney General? So I think people are asking me about, because someone asked, like, what's the next bubble? What's the next big stock bubble? And I was saying, like, cannabis and marijuana. But what people don't understand is these things are going to trade like biotech stocks. So these things are going to be very volatile, the marijuana and cannabis stocks. And you know, I highlighted this a couple months ago with the Tilray, and I said, I looked through their financials, and I said, overall, this is not a good company. However, the market doesn't care as long as they can grow revenues, even if the losses grow. So in the short term, it's a beauty contest, because if they grow revenues, people are like, oh, I can make a quick buck, the stock's going to go higher. But you could see a situation like with biotech, and for people who are not familiar with biotech stocks, when I'm making that comparison, when a biotech stock, whether it's a company that has like cash flow from a drug or a small little tiny biotech stock, if they issue the right type of press release, the stock can pop, you know, it could go up hundreds of percent in a short amount of time. But then after people take profits or people start to digest this more and say, oh, the drug's going to cost billions of dollars still to get through the FDA approval process, or they're, I don't know, 5 or 10 years away from cash flow, it's kind of like a junior mining stock that releases good drill hole results. The stock would crash. And so you can have this cycle repeating for a while, over years. And I think the marijuana industry is going to be like that. It's going to be very volatile. There's going to be big booms and busts. And overall, I think a lot of those companies are not going to be consistently profitable in marijuana. But their share prices could go up and down like a yo-yo. And it could be very frustrating for most people because they don't really understand, they don't look at the financial statements and understand how crazy the industry is going to be. So I think the industry, like biotechnology stocks, is going to be press release and news driven. So if there's the right news story or right press release from, take for example, the last couple weeks, I think the state of North Carolina announced they're going to legalize marijuana. So if there's a marijuana stock and they're going after the North Carolina market, and this is hypothetical, I don't know of any marijuana stock like this, but let's say it was like a penny stock for marijuana stocks, and they said they were focusing on the North Carolina market, and then all of a sudden there was the announcement that the state of North Carolina is going to be legalizing marijuana or looking into it in the next year or two. You could see that stock, go up hundreds of percent in a short amount of time. People take the profits. You hear the stock written about on articles on Seeking Alpha or elsewhere, even maybe Jim Cramer pumps it temporarily, and then the stock crashes. And you know what? Over 6 months or a year or two, you could see that cycle repeating with stock pops hundreds of percent and crashes, stock pops 100% and crashes. You could see that happening a handful of times. So I think marijuana is going to be similar to that. Ultimately, I don't think a lot of these tiny penny stock companies in marijuana and CBD, I don't think most of them are going to make any profits. Maybe I'm wrong about this, but I'm all for entrepreneurship and innovation and free markets, but until the federal laws in the United States get fixed with the banking stuff, the small companies operating in the United States are going to really struggle. A lot of Americans do want marijuana legalized. The problem is at the federal level and the banking stuff. But you have like Colorado marijuana, crossing state lines. I've heard these stories from people that there's tons of Colorado marijuana that's legally grown in Colorado, and then it ends up in another state that's illegal, and it's happening. Scott, if silver goes to $1, I'm going to back up the truck too, but I don't think it's going to $1. So maybe it goes another $1 or $2 lower. I mean, we're almost at a silver price, Scott, where the silver miners are close to bankruptcy. The higher cost silver miners, like the ones that have been adding more gold production, so your Coeur d'Alenes, your Heclas, those guys, if they didn't have gold mines they bought, they'd be in even bigger trouble because they've cut the cost that they can cut. They're still high-cost producers. So Coeur d'Alene last month had really bad earnings announcements. They lost a lot of money producing gold and silver, probably mostly on the silver side. Some of these silver miners are going to, and this sucks, but this is how the mining industry is operated. Before they go bankrupt, what the miners will try to do, not all of them, some of them will do this. Coeur d'Alene has done this, I believe, 4 times in the last 15 or 20 years, is the reverse stock split. So the market cap stays the same, it moves the share price higher, and then they start diluting again. So I would watch out for that. I would watch out for the announcement of reverse stock splits, and then for some of the companies, that may mean that they're going to try to do dilution and repeat the cycle over and over again. And that's dangerous. You don't want to be holding the stock when they announce a reverse stock split and then the dilution cycle starts over and over again. Again, not financial advice, just my opinion, stupid disclaimer. Ray Dalio just stated the dollar set to explode. Yeah, maybe in the long term, but right now in the technicals, Navechild, that the dollar index is still holding up strong. So in the short term, there's no evidence that the dollar index is about to implode. Now, over the next 6 months or a year, the U.S. Treasury has to sell a lot of treasuries with the Trump budget deficits and the effects of the Trump tax cuts and other stuff. Thank you for the $10 donation on Super Chat A. I appreciate it. There was one other guy, I think it was Jim from Seattle. Thank you, Jim. I appreciate it. Okay, guys, we're almost at an hour. Almost at an hour. I'll answer a couple more questions. Miser Tesla trolls, their religion is Elon Musk and Tesla. They think that Tesla can save the planet, that Elon can save the planet. They don't care if he's doing accounting fraud. They don't care if he's doing any of that. They don't care if the SEC investigated him and he settled. They don't care if the Department of Justice is still investigating the company and will most likely bring charges. I was just listening to a podcast on QTR, Christopher Irons, and he had Mark B. Spiegel back on, and they were talking about a lawsuit against Elon Musk and Tesla, and it was going through all the details of how proof that the lawyers have that Elon Musk was lying to get bonds sold 2 years ago and lying about production numbers, that Elon knowingly did it to raise a couple $1 billion in bond sales. I mean, if they can prove that, it's, oh boy. He's looking at big fines. I don't know if he's going to get arrested, but he's looking at big fines. There's tons of fires and tons of problems with that company. The share price has not crashed yet, but over the next, 6 months or a year, maybe, we'll see what the Department of Justice ends up deciding to do. Because normally the Department of Justice now, they don't waste government resources unless they definitely want to file charges. The SEC is different. The SEC will take a fine without bankrupting a company. Francine McKenna said that. She said the SEC intentionally issued a fine to Elon Musk and to Tesla Motors that would not bankrupt the company, and they did not want to be blamed for bankrupting the company. The Department of Justice is different than the SEC. And also in the SEC settlement, that the SEC, in exchange for settling, you do not have to admit guilt. So the Department of Justice is different. Normally, when the Department of Justice and those prosecutors get involved, they want heads. For the right prosecutor there, getting Elon Musk or getting Tesla Motors could make their career. They could be looking at running for political office later. Like maybe governorship or something higher. It just depends. But in general, though, with a government agency like the Department of Justice, if they have that much dirt on someone, there's charges coming, big ones. And it's not going to be a tiny little fine. But I don't know how long that government investigation is going to take. But in the meantime, Tesla has a lot of other problems. They have a bunch of bonds due. I think $800 million, an enormous amount of cash that they're going to have to pay out. On top of that, they got a bunch of competition coming with electric vehicles in the next 3 to 5 years. And the competition is good at making good cars. They're good at making cars that get reviewed really well. They're good at solving problems with dealerships and maintenance and warranties and all this stuff. And Tesla's not... If you look at all the comments on Twitter from people complaining, there's people who bought a Tesla and drove it home and their car didn't get registered in the state properly. Months later. There's tons of these. Okay, well, we're over an hour now. I went on a Tesla rant. Sorry. Just kind of pissed off at those trolls. I work my butt off and I do good research, and I don't want to be called a meth head. Oh, thanks, Albert, for the super chat donation. I appreciate it. $5 penny. I think eventually most of the states are going to legalize weed. Why? They're bankrupt. They need the tax revenues. This is why you're seeing state governments and local governments want casinos. And this is why you're seeing more of them start weed, legalized weed. They need the tax revenues. These states have massive unfunded liabilities. They have retired government employees collecting enormous pensions that need a certain amount of retirement guarantees on their investments, that they were promised health care. In a lot of these aspects, and I've heard this, and most people aren't aware of this, the government employee at the federal, state, and local level, this is not always the case, but in some cases, they make double the salary or more of an entry-level private sector employee now. And they can't get fired in some instances for even committing a felony. So this shows the misallocation of capital and how this is unsustainable, where we have all these promises and unfunded liabilities with investment returns and 80% of their salary guaranteed for the rest of their lives, and Cadillac healthcare plans to government and federal, state, local, municipal employees. The money's just not there. I mean, even if they print the money. Okay, guys, well, we're over an hour. I'm tired. I want to go lift some weights and relax. So everyone have a nice rest of your week. Oh, and I have an interview. Hopefully things go smoothly because you guys asked for it, with Brent Johnson. Remember, he was on in March talking about his dollar milkshake theory. We will have him. I will have him back on hopefully on Friday, and we will get an update on that and what he thinks is next. He thinks the dollar rally will continue. He thinks in the short term, I believe I saw him do a presentation on the internet at Cambridge House. So if you want to steady up and do some research on that, go look at his dollar milkshake theory, my interview I did with Brent Johnson in the Wall Street for Main Street YouTube channel archives from March, and then also his recent presentation at a San Francisco Cambridge House Gold Conference from a couple weeks ago. Is either last month or a couple weeks ago, where he updates on the dollar theory. He even used some of the Highlander movies with Connor MacLeod of Claude MacLeod, with Sean Connery and those guys about that with the dollar and gold. Just thought it was an interesting comparison. Okay, guys, that's it for now. Bye.